What is up, guys? So I'm filming a full breakdown on this trade that I actually sent to my private community, and I want to go over it. As you can see, the idea was to short gold at 2742, and we had a nice 80 pip reaction so far. Um, we might see a continuation of this trade, but as of now, the price is still chopping around. In my opinion, the overall market sentiment is still bearish, so I do believe that gold can push higher, probably towards the 2747. I won't discuss why on this call, but I do want to break down this beautiful, beautiful trade we had on gold. So basically, our entry was over here, our stops was at 20 pips, and basically, our take profit basically was around this low over here. So, which in this case, we would just close this trade over here at 80 pips for a very, very beautiful 4-to-1 risk reward. All right. So, how did I find this entry? How did I find this super exact sniper entry? And yeah, let's zoom out a little bit so you can have a better understanding of how did I find this trade and basically how does my strategy work? Especially in scenarios like this where it's very hard to mark like key levels or trend lines or any of those things. So I use Fibonacci's and Fibonacci retracements on basically when the price is extending and especially when it's at price discovery, right? So you can see the wick perfectly touched the zone, came back down. Yeah, basically I have my bigger time frame Fibonacci retracement. As you can see, we have this one, the 27.2, coming in confluence with the 127.2, basically with the 2742.5, which is a quarter. Um, you can call it a psychological level, right? In this case, it's psychological level. I'm pretty sure if I do extend my fib over here, I might get some sort. All right, there we go. The 200 is coming perfectly in line with this level over here. So as you can see, we have four nice confluences. It's not the best confluence I've ever had before. So as you can see, the price did recover from the move. So knowing this information, yeah, basically we closed the trade over here and it was a great success. So basically what you want to do is find Fibonacci retracement areas that are in confluence together and match the overall storyline and the overall market sentiment, right? So let me give you an example of a level that is not respected versus a level that is respected. So over here we got the 78.6. As you can see, this level is getting whacked left, right, and center because the overall sentiment does not match this level. It does not align with the idea of the institutions. Like it has to match everything. Like everything has to go, um, it has to go smoothly together, if that makes sense. So in this scenario, it does make sense because the price is at a very premium price for shorts, right? We're at all-time highs. We have this high and this high over here. It does make sense that a lot of retail stops are going to be at this zone, which happens to be the confluence area that I talked about. So this is why this short was valid and we took it and we made a bunch of money on it. And as you know, I actually sent this trade for free on my Telegram group and on my X. So if you're following me on X, you sure did see this trade. If you follow me on Telegram, if you're in the free channel, I'm 100% sure that you have seen this setup before it was posted, before it happened on the chart. This setup was literally an hour ago, and I decided to hop on here and just update you guys and let you know how I find these setups. how these setups are so easy to find. It's not hard to find setups in the market. What is hard is actually keeping a plan, basically keeping a plan, staying disciplined, being patient, and executing when needed, and exiting positions when you are wrong, right? You don't want to hold this position. Like if I enter the price over here and the price started doing something like this, and did something like this, like I have no reason to be in this trade because that is not what I was looking for, right? Sometimes I go in the trade knowing that the price might chop for a bit and then make the move. But in this scenario, I was not looking for a chop. I was looking for an exact wick like this one and a push, a strong push to the downside straight after. So this is what we got. Of course, the double, the double wick to liquidate all the early shorts, which is totally fine because our stop loss is basically um, over here. So we're very, very far away from the stop loss. Um, very minimal drawdown, very, very minimal, around 1, 2, 3 pips max, depending on your entry. If you entered a bit earlier, you'd be like 5, 6 pips in drawdown. But that is absolutely nothing in comparison to the take profit. As you can see, a beautiful 4-to-1 risk to reward ratio. Yeah, this is how we do it, guys. I'll see you on the next one.